Big oof. Here's our hour. Looks like we would have hit all of our take profits right there. What time did this hit? 13? That was 1. That was 1 a.m. No, p.m. That was 1 p.m. Wednesday. That giant move up. We would have made profit off of this. A huge amount of profit, too. Let's go down to the 5 minute and see what exactly happened. Because we did a lot to determine what price was going to do. We entered off all confluences found on Newsday. It was an FOMC yesterday, to which price went down, then plateaued between take profits. We were in this. This was current price at the time of making this block. We are examining price after the red block. After this one. After this. Actually, this is the red block. This price decided to go way higher. We would have entered off of this candle here. Because on the 1 minute, this was our break of structure. That price went higher, and we knew that price was going to continue higher. This was a breaker block that was in fact respected, or I'm sorry, it was disrespected, which said price was in fact going to go much, much higher. We knew this was going to happen. Our stop loss would have been underneath this low, this key level here. And yeah, a little bit of patience after that plateau, we would have seen a huge return. So much of a return that we actually see, guess what? Another plateau. It dipped down a little bit, sure, but it never went back down below this. Except for like right here. Crazy what a little patience will do. Honestly. Real crazy this one. Let's see what the 1 minute has for us. Boom. This is where we entered. This is our break of structure. Said price was going to go much higher. All confidences were found after it hit this key level here. Once it come back down, we got to here before it really started taking off. As you can see, we didn't know what price was going to do here until we had a breakout. And price decided to have its way. Had we have placed our stop loss below this low here, which was the lowest, most recent low, I think we would have been stopped out because price decided to come all the way down here twice. It retested a level of assuming imbalance because we had a huge move up right here. And there were no sell orders in this except for like at the very bottom. So price continued higher. Looks like this right here would have been the breaker block, our failed retrace. From this, we had liquidity sweep, order block, boom, breaker block off of this. That was, in fact, like this was disrespected, then balanced out. Once it had retested this level, price shot higher. And we had another purple line way up here, right there. Boom. We thought price was going to come all the way up to here, but we were not expecting price to go all the way up there. We were not expecting it to go that high. What high was this actually targeting? Let's go to the 1 hour right quick and see what it did, because that is colossal. It went and tested this high right here. Up, down. This is what it tested on the higher time frame. I imagine this is going to, it actually filled the breaker block on the time frame, because this was a disrespect breaker block. So this showed that price was going to go lower. I want to see. Let's see what news has to offer us right quick. We have 3 CPI red folders, another unemployment claims red folder, and 30-year bond auction orange folder. We're staying away from today trading. I wanted to make this video to actually see what the heck happened. What would have happened had we taken this trade. I am curious to see what I could do, but I'm not going to today. We might tomorrow, though. News was at 2 p.m. yesterday, and it wasn't until 1 that price decided to go crazy. We can see that all the way through this. So, with that being the case, I just wanted to make this video because I knew before we ended yesterday's video we wouldn't have seen a real progress made there, and I needed to stream at 1. So yeah, that being said, let's see what tomorrow brings. Not today, but tomorrow. I want to see what tomorrow does. I'll see you then. Hope you guys didn't think I'd be ending the video this soon. I hope. I imagine I caught none of the audio. We're gonna set all that up. Boom. We're gonna do this. Boom. Boom. Like we're looking at a completely different chart. Shocking. Boom. That's the sound. Crazy sounds. Anyway, yeah, hope you guys weren't expecting me to just straight up quit the video out. I'd actually like to make some money. I'm not gonna take a trade today though. What I'm going to do is I'm going to patiently wait for market to open and then to take a trade based on what we've seen so far. Even on the daily, we're in a downtrend. Lowest point, highest point. This was after a huge leap up. This was on news. I imagine this is a super strong draw on liquidity because that is a massive fair value gap, which I think price is going to go lower into, which would make sense alongside this trend. We have accumulated enough and balanced out this. So I think this is a valid fair value gap. We also have a fair value gap here that was inverted. Inverse fair value gaps are signs of continuation that they'll go lower. They're gonna remove all of these because they are no longer important to us. Yay. I think it's going to go lower. So what am I going to do to prepare? Mark out the lows. This one here. Boom. We have those lows. Yay. Do I think price is going to go higher? I don't know. Maybe. What would I be looking for price to go much higher? Highs to take profit off of. Like that one there. Or this one here. Or this one here. Or this one here. Because we've already demonstrated price like is all over the place. I'm gonna put one right up there. But I'm not gonna go higher. Not gonna. I know this is a super strong draw on liquidity at the moment, and technically we've already explored it as an option. Yeah. I'm not gonna go higher than that. We have our highs to take profit from. We have our lows to take profit from. In the event price wants to go in either direction, let's actually determine what price wants to do. What's to do today? First off, we gotta identify a couple things. A liquidity sweep. Do I see a liquidity sweep anywhere in this? No, not yet. Anyway. Well, I could say this right here, but this has already happened. We want to predict the future. Best way to do that is to look for a break of structure and a liquidity sweep. Technically, we broke structure here because this is a lower low, or lower high, sorry. And then we're waiting on the lower low to form as we speak. London session is not done. that stuff yet. We got 21 minutes before that candle closes and the New York Stock Exchange opens. Am I on the right input? I am. Good. For a second there, I thought I wasn't. I was gonna lose my marbles. I was gonna go crazy. Anyway, yeah. I hope you guys are ready for some of the videos I've got planned, because if you've seen any of the streams recently, specifically the most recent one, you're gonna notice that I'm gonna have a lot of much more boring videos out, but videos nonetheless, detailing specific stuff and hopes to entertain, because I got something really cool planned. With that being said, I kind of can't wait for it to happen, because it's going to be awesome when it does. We have CPI, as mentioned before, across today, so we can't really do anything. In realistic hope, we're looking for price to come back down, close below this low, give us a liquidity sweep we can look at. Once that occurs, I can confidently say that yes, price is going to go much higher, because that liquidity sweep is a sign of reversal. In the event this decides to go up, which it looks like it's doing now, it'll probably close up above this high here. If it closes above this high, that'll be a liquidity sweep on the upside, signaling reversal or continuation that price is moving down. We have a fair value gap here that actually closed below this fair value gap here. And as a result, we had an inverse fair value gap, which means price is going to continue higher. So I think what price is going to do is it's going to go up. It's going to close above this high here. Once it closes above this, we'll know that price wants to continue down. If price closes below this key level here, we know it'll continue up, because liquidity sweeps are signs of reversal. And yeah, I believe this can be considered a breaker block, because we had a leg up and then immediately after a sharp leg down, price went above the wick of this, meaning it's been disrespected. And so price is going to continue higher, if I'm not mistaken, per the notes I've taken beforehand. I need to actually take notes, valid, solid, hard notes on breaker blocks, because it seems I've got such a difficult understanding, such a bad understanding of what breaker blocks are and how to actively use them. Gosh. These notes are good. Oh no, that's not 10. What is this? What is 14? What else did we learn? That. Okay. I'm going to pause the video. I'm actually going to go look up another video right quick and actually take some solid notes. So that way it's not a question of, okay, let's just go ahead and find a video and rewatch it 100 million times. I want to actually learn and have these notes gold. So we'll be right back. So I just got through watching some videos from TGR and I actually took some fire notes. Would you like to see them? Boom, there they are. I essentially grouped them all into one thing because all three of these were brand spanking new when I got to actually learning about them. So, what did we learn? We learned how to identify breaker blocks. I know how to identify inverse fair value gaps, and I know some of SMT where you haven't really gotten to that. I just wanted to take a look at the chart before I really got much further with taking any more notes, because I feel like this is enough for breaker blocks. This is enough for inverse fair value gaps, and I'm confident with both. And in the event I doubt myself, boom, I have 1, 2, 3, technically 4 paragraphs worth of notes that I think are valid and I understand so well that I can apply it to the chart and it not be a problem for me. Inverse fair value gaps are pretty understandable, like I understand what's going on here, right? I know what an inverse fair value gap is. I know what it is when it comes to confluence, right? And what it means. But now I have a question when applying it to the chart here, right? Because we didn't have a break of structure all the way up to this. We had a fair value gap, boom, right? We inverted that fair value gap, which means price is going down. That's signifying what this is. From here, because this isn't filling anything, right? This fair value gap here is a valid one that we're looking at. So what is a fair value gap? A sign of continuation. That trend is going to continue moving down in the direction it's in until it's disrespected. We can expect price to go higher. Okay. So from here, if we were looking to take a trade, what would it be on? It would be this fair value gap here. It would need to get closed above, specifically, right? For it to continue higher. That's on a buy entry. On a sell entry, we're looking for the same thing. And this is respecting it because price went up in, but it did not close above. It did not close above at all. So, respected fair value gap, price is going to continue lower. I think I've made progress just by taking notes today. That should have been something I did a little while ago because it probably would have saved me the $8,000 I lost Monday and Tuesday. But yeah. He said the SMT is not for Forex, but I'm gonna get to the video. I'm gonna pause this. I'm gonna go back to the video, and I'm gonna relearn that. I'm just gonna go over the entire thing again because, yeah, I'd also like to know. Like, I need to review the last segment of the breaker blocks in order to determine what's a respected breaker block, what's a disrespected breaker block, because that's important to know as well. I think I was wrong in the earlier gist, this right here being the breaker block it is. I think I'm wrong in this. I think I am. They are the moves just before the breaks of structure. Technically, this is within structure. Why? Because we wrote past this, which showed a kind of sign of continuation. We did not break structure to the downside yet. So without there being a break of structure, we can't accurately identify an order block. We can't accurately, though this could be an order block because up, down, low, boom, this, right? So it could be an order block and a breaker block at the same time. Could this be the breaker block? All 6 of these candles? Because it can be multiple. He did say it could be multiple candles. They are the moves up or down prior to the break of structure towards the reverse in trend shift. These are not to be confused with order blocks. They are the leg down before the break of structure / liquidity sweep caused by order block. We didn't break structure until this candle here. So this was the order block that caused this break of structure. And then they're typically within the same price range. So from here, I'm guessing, all the way down to here, these 3 would have been considered our breaker block because they have the move down before the break of structure, further down. Remember, order blocks and breaker blocks are both signs and confluences of continuation. We had an inverse for value gap here and the breaker block as well. Then we got our order block and then the break of structure. And from this, we could technically call this a liquidity sweep because it swept the low of this here. But was it enough to continue down? No, it wasn't. In fact, we did not close below this low. We didn't close anywhere near this. Price went down, swept nothing. It didn't go anywhere. Instead, it's rebounding. So, and per this inverse for value gap here, price is just going to continue lower. So we'll wait for it to continue lower, hit this low. This low should get hit, and once it does, we'll see that retrace back up. We should be able to see the break of structure. We should be forming our order or breaker block now. Actually, no, I'm sorry. This would be the breaker block. This would be the order block because it causes the liquidity sweep. Once that block is put in, we'll have a valid liquidity sweep, at which point we'll be working back up towards our confluences of the 5-minute, looking for a breaker or break of structure, inverse value gap, SMT divergence. I'm not entirely sure I want to use the SMT divergence anymore just because it is as confusing as it is to me right now. And again, I got to get back to the video in order to see exactly what I'm talking about so I'm not misleading myself. And then I'm confident in identifying each of these continuation confluences, be it fair value gap, breaker block, order block, equilibrium, yada, yada, yada. We do have a fair value gap here, which says price is going to continue moving down. It's just a matter of identifying the rest in order. I have notes on equilibrium, but I also want to re-watch the video and pair them up with the notes I currently have. So that way, in the end, I have a valid understanding of what equilibrium is. And I think I understand what equilibrium is. I think I do. You go from the most recent high to the most recent low. And then when price, after hitting this low, comes up into equilibrium, which would mean price would need to be at a premium. Once it hits that premium, we can press enter or wait for the breaker structure on the back down, right? Because at that point, we'll have swept liquidity. We'll assume we're in an uptrend. It'll break structure back to the downside after having a minor retrace. And then from there, it'll either be an inverse for value gap, which means it'll close above this, or it'll straight up break structure back to the downside, in which point we'll be looking for that entry. And then we can just watch price plummet or continue higher. 8:30 a.m. stretches be like, whew. You know the stretches that just take over your whole body? Them's the good stretches. Good stretches and good yawns. I's not tired, I's just waking up. Anyway. Let's get back to the video. I muted the mic because there was a baby crying earlier. Big oof. I think we've managed to pretty much jot down every single note we can when it comes to TGR Trades videos. We're currently watching that order block form, I think. Or no, I'm sorry. Not the order block, but the liquidity sweep. Because we're right at the precipice of this right here being a thing. We still have 7 minutes for that to close. I imagine we are going to hit our key level here. Do I think we're going to sweep this liquidity here? I don't think so. I don't think so. I do think we're going to hit this key level, though. I think we are going to sweep this liquidity. And from here, this continuation confluence here says price is going to continue lower. So I'm going to imagine it's going to continue lower until it gets disrespected. And then, yeah. It's amazing what actually taking notes can do. I think I did pretty good with taking notes today. And actually learning a little bit and actually like it's not the it's the way the US education system I guess did it where they had you get so used to hearing something and then writing it down that you never forget it, right? And when you write it down it's one of those, oh, I know this. Interesting. Compound it with something else just as difficult and something's got to stick. We got 5 minutes for this candle to close. I think what I want to do is I want to pause the video. I am going to start working on something else more hands-on. And from there, I am going to work on continuing this video. This will get posted, and then the next video will have something similar occur. I don't want to take trades on either today or tomorrow because of news. Though I know that's where most of the volatility will be coming from, is news. We'll check news tomorrow. How about this? We'll check news tomorrow and we'll attempt a trade, but I'm not going to guarantee taking a trade. We'll attempt it, meaning we'll see if a trade opportunity becomes available to us. And if it does, yay. If not, we'll see. That's all I can guarantee. We will see. If we don't hit a key level, I am strongly considering it just consolidating within these two, within this and this. It'll bounce between the two for a while. Market is open. This is our 8 o'clock candle, so it'll probably consolidate for a little while. We're waiting for it to hit a key level, and it got really close to hitting both in the same candles time frame. Let me see what Trade Locker is doing. We have 3 CPI folders, so I expect that the unexpected. I'm expecting it not to work the way we want it to. I'm expecting price to continue higher, even though this right here says it's going to continue lower. That's what we're looking at. That's a fair enough note right there. I think we're good. We'll be right back. I've been muted this whole time. I'm going to keep doing that too. Going back to what I was saying before, we hit our key level. We're waiting for it to either clear this key level or clear this key level. We're looking for, at the moment, break of structure or inverse for value gap. Only one of those two will suffice. Either it will close above this and continue lower, or it will continue up, close above this, and move higher. That's what we're waiting on. In the event price continues down without giving us a fair value gap, we're looking for an inverse fair value gap on this key level here, at which point price will continue much lower. Only after this is closed below will price continue lower. If either one of these are closed above, I'm going to expect price to continue higher. Again, we're looking for that inverse fair value gap and the break of structure to confirm that price is in that reversal mode, because we did sweep this liquidity. So we're looking for price to continue higher. We're looking for a buy position off of this move. Once this is the case, it's just closure, closure, continue. And that'll be that. I'm going to go ahead and pause the video now because I don't think I can do anything else at the moment aside from identify blocks that might not appear until much later. So, BRB. Okay, so with any luck, this should have changed quite a lot. Look at that, it did. Further fair value gap, we had a continuation sign. Boom. What are we looking for exactly? We were still in the 5 minute, if I'm not mistaken. From this fair value gap on down, price continued lower. Yay. What exactly were we looking for here? Price to hit key level, which it did on this note here. Right? We had a fair value gap form up here that was not resolved. And this did not inverse a fair value gap over here. Though it did, I'm guessing, fill a breaker block here. As a result, we had an order block, sweep of the most recent low. This order block here caused this sweep. And so price continued lower. How would we have been able to take a trade on this? Well, let's go work down our confluences again. We got a break of structure. Where? Where did we get a break of structure? Where was that at? Well, hard to tell, but this right here was a retrace going up, right? And we did not break structure there. We have been in structure the entire time. We've been looking for signs of continuation. The price would continue dropping, and as a result, they have. I think this is another note of where I get confused at, right? Because the strategy enlists the help of liquidity sweeps, which work as signs of reversal. Well, we had this here, right? We had a cap off, and then we had a sweep here. Price fell lower. And I guess this right here would have been our sweep, our sign of reversal that price was going to continue moving lower. We had a closure, not above this high, but we did sweep at this high right here. Price continued lower. And then we also had this right here, which was not a sweep of a high. No, I'm wrong. This right here. So our break of structure would not have been here. No, it would have, because this was up into an uptrend. We broke structure on these two down here. These were highs, higher highs and higher lows up until our lower low here. We broke structure on this candle. Nope, this candle right here. And then we had this here, right? As a result of that, we saw price come up. It wasn't enough to take out this previous high here. It was enough to take out this high, though it didn't close. It was enough to take out this high, though it didn't close above. We swept pretty much all of that, minus this. And then price continued moving lower. However, we would have been diagnosing this off of this key level being hit here. Although, I guess this would have been more accurate representation of a key level being hit because we had a closure below it. So we had hit, like up. This was an order block that caused this sweep from here down. This is a sign of reversal, in my opinion. We even swept this here. So, yeah. My brain's drawing a blank because I've been editing a video for the past 2 hours. I've been awake since 6. Yeah, the past 2 hours I've been editing a video, and I actually made a really good video. I can't wait to have it posted today. Yeah. Yeah, it's showing that. Okay, cool. So, no. Fair value gap there now as well. That showed price would have continued much lower for this right here. So we missed one of these. I think it may have been an S&T divergence, to be completely fair. We didn't do anything on this. So it was 8. Here's 950. Hello. Our key level would have been something like this right here. It was hit on this candle here. Same candle there. Hi, what you doing? Urgh. Come to say hi. Came along to say hi. You gonna boop the microphone? Say boop, boop. Here, you could stay right here for a second. Okay. So we had. I want you paying attention. We had this right here. Look, that right there. That right there, or not that right there. That right there. This red candle here, right? It crossed the white line, right? This, realistically speaking, this one did it first. This one right here, right? This one crossed the white line first. What we're looking for is all of this boring stuff here, right? We're looking for break of structure, inverse fair value gap, or an S&T divergence, right? Okay, so we hit this, right? We came up, we came back down. Woo, we went up and down. However, looks like we had a bit of a hiccup here in the data works because alongside of hitting this white marker here, we had a fair value gap, which was our sign of continuation. We didn't get that fair value gap on this candle or this candle. As a result, we essentially had continuous move down. Exactly. Right. Exactly. Makes sense. It's all coming together. Oh yeah, it's all coming together. Anyway, we have fair value gap that did present itself here, right? Dit. What's dit? Dit. What about dit? Dit right there. Say dit. Say boop. Say boop. He's booping the microphone. He's playing with the little mat. Boop. If I let you down, will you play with anything else except for what's in my room? Probably not. But we'll see. There you go. What you doing? What you doing? There's no toy. Back up. Puppies. Trying to identify what's needed before this fair value gap here. because it's between these two. This right here was a sign that price was going to go down, but we didn't know if it was going to or not because we had yet to see a key level get hit. It got hit. It was respected, and price continued went lower. I'm looking for. Boop. What would be a valid break of structure here? I think it'd be this right here because we were in an uptrend temporarily on the 5-minute, right? And then we came down from this fair value gap. We had a break of structure on the low. From that break of structure, we would have waited for another fair value gap to form, which is what we got right here, right? Boom. But before that, what could we have identified? We could have identified a breaker block or an order block. You're squishing the mic. What you doing? What you doing? What you doing? Boop. He's gonna play with the mic for a little bit. It's okay though. I'm looking at the chart. Looks like we had a breaker block form. Because it's right here, right? We had this form. Price went lower. But then we went higher. Price went above this block here, making this a valid breaker block. Breaker blocks are signs of continuation that price is going to keep going down. Sure enough, we got that. Immediately after that, we had a fair value gap here, which was not an inverse fair value gap, but instead the prelude to a break of structure. We would have been entering off of this candle here and watching price continue to fall. I think I've identified all the building blocks needed among this trade here, right? Yeah, if I did something wrong, I want to pause, but at the same time, I feel like we made a crazy amount of progress today, and I also want to see what tomorrow will yield, because we identified everything along this line for the best trade possible, and it was only after it formed. So, my question, what you squirming for? What you squirming for? You okay? Oh, you're sleepy. You are so sleepy. You okay? What's going on? What you doing? What you forming like a pretzel? How you turn into a pretzel? Boop. Say boop. Say boop. Boop. Ooh, sorry for bumping y'all. Are you sleepy? I think we did good today. Comment section. I think we did very good. And we stayed profitable because guess what? We stayed away from news. I'm sticking with what I said earlier. Tomorrow, we're going to look for a trade, but we're not going to I'm not going to promise that we'll take the trade. We'll look and see, wait for everything to form the way we want it to, and then from there, attempt at finding an entry. Knowing what news is, we're going to attempt to find an entry. With that being said, thanks for watching. I'll see you guys in the next video. See ya.